With us now for more is Alfred Garcia, Research Head at AP Securities, Inc. So good to see you again, Alfred. Welcome back to the program.
Good morning, Kathy. It's good to see you again.
Yeah, so much happening out there. And we started the show with SIMEPA. Now that starts, and it's viewed as a landmark law. As far as the president's concerned, something good for investors, stock market investors, and retail investors. But how good is it?
If you look at it in isolation, it doesn't seem that significant. So the PSE said that the average trade value per trade in 2024 was around 50,000. So this law will reduce the stock transaction tax by 0.5%. So that would translate to around 250 pesos for the average trade of 50,000. So it doesn't seem much, but when you look at it in a broader picture, it will lower the hurdle rate for investors to at least break even. And then it can also encourage more short-term trading and encourage more retail investors. For retail investors, that 250 is a lot. So it could really stimulate the retail scene in the Philippine stock market.
It's a good start. And as you say, break even. Break even's good for a good start.
Sometimes it's the goal.
What do you think of 101 Global, though?
101 Global really has a very interesting growth story going for it. They have an ambitious plan. As Hannah said earlier, they wanted to have 1 million rooms across 100 countries. Very ambitious. And their listing, as she said earlier, it really gives them access to a deeper financial market than the Philippines. So it really makes sense that they listed in NASDAQ.
And same with property counters, I just read there, Ayala Land Hospitalities just bought New World Hotel in Makati.
A lot of developments going on in hospitality right now. So there was this Ayala deal with New World, and then previously we also had Mega World doing a collaboration with Accor. We also have Hotel 101, and a lot of other property developers are really getting into hospitality. And it's something that's based on, I guess, despite the flattish tourism numbers, we're seeing a decline also in individual tourist spending that's around 5.6% to around 117,000 per tourist. But at the same time, we're seeing spending on accommodation go up by 5%. By 17%.
And that's from foreign tourists or the locals?
That's for inbound tourists. So we don't get data for domestic tourism. So that's just for the inbound. So that's not even counting the domestic tourism. So that spending on accommodation has gone up by around 17% to around 40,000 per tourist. So maybe that's why the property developers are really positioning themselves in the hospitality segment.
And that the property counters, when you look at it technically, as I had mentioned earlier, from Trading Edge, that they're the ones to invest in as an industry.
Right. This is underpinned by the recent rate cuts by the BSP. They started last year in August. They cut again in June, and we're expecting another one later this year. So this is really a positive for the property market, which is primarily debt-driven. So most people just borrow money to buy property, right? So the lower interest rates should really stimulate the Philippine property market again, which we have seen weakness in recent months, years actually. We've seen weakness in the residential segment. That's why the property developers have been trying to diversify their revenue stream. But now that interest rates are starting to come down, we should see the residential market recovering as well.
But how much of a leeway, though, for interest rates to come off some more, given that, one, we've just had a wage hike of 50 pesos in the NCR region starting this month, and also inflation estimates, though?
Right. So for the wage hike, there will be a slight effect on inflation. Definitely, this will be passed on to consumers by the companies, by the employers. As for the leeway that the BSP has, we have really moderate inflation moving forward. So we have the inflation numbers coming out later this week. We expect it to be around 1.5%, 1.6%, fairly moderate. And then we expect inflation for the rest of the year to remain within the BSP's target. So that underpins the case for another rate cut. Although the problem is, we just did a rate cut recently, and then the Fed is not meeting until September, and that's when they are expected to cut. But the BSP is meeting again in August, before the Fed does. So if they cut again in August, that will bring down the interest rate differential to 0.5%. So that's really low, and that has the potential to weaken the peso and further fuel inflation. So our base case scenario is that they will hold off until the October,
yeah,
the
right.
October meeting,
Okay.
or maybe even December.
I'll keep tabs of that. Thanks so much for joining us.
Thank you, Kathy.
Alfred Garcia of AP Securities.